Morning everyone. So what we're going to do today, a little bit different, is that we're going to take a copy of my current chart. So this is my live chart right now. We're in a counter trend trade, a bit risky, but it's got plenty of reasons as to why we take it. But what we're going to do is literally just take a copy of the current charts and we're going to backtest the previous week because I got a negative result. I think that was accurate. I got -6. I took 8 trades, took 2 at break even with manual intervention, so I should have been -8. It's not bad. I just followed my plan. Considering that we typically make between 20 and 40 R per week, or what's available for us, it's good practice to just go back and see what you're doing. I'll just have a quick look at this while we're in it. By the time the video comes out, it should be the next day, so this would have been done. There's a potential entry here. So I think price is going to come back up. It's why you don't move yourself to break even until all the blocks have been taken. But that could end up being I'm just going to mark this up actually real quick. I think it was about there to there. It'd be like a 1 pip stop. And the target's still going to be the same place, which is actually going to be a 34R trade. Anyway, there's a 1 minute tip for you. We'll just drop that down to a 1 minute real quickly and just show that again. Entry from there, literally the break-even line to just behind that swing, because if that swing's gone, then it will go. And then to the entry of the long that we want to take, 30R. Okay, so there's a 1 minute trade that you could take. Whether or not it wins or loses, doesn't matter, it's valid. It's counter trend, but it's valid. Anyway, what we're going to do is we're going to do bar replay. Going to go back to the start of the week, which was here. I'm going to leave on all of my trades. We're going to be quite quick with this compared to usual because I just want to do this really fast. Let's go back a little bit more so we can have a quick look at the charts. So on the daily, these are my current markups, by the way. The daily we're expecting to go down, and the weekly we're expecting to go down as well. So the chart is essentially working its way up, I think, to this area at least, and then to drop off. Okay, so really we're expecting like a bit of a zigzag up to here. But we ended up on Friday with a red news event, so we ended up in a bit of a range last week, which happens, it's just part of trading. Here we go. So just on the weekly, it's a little bit clearer, I think. H4, just to have a glance at it. This is how we ended up. Always just ignore, well, pretty much always ignore the last 4 hours on a Friday. That's basically the close down of the markets. We're expecting price is going to come up and react somewhere up here. So some sort of zigzag up like that, and then start its descent, so go down to this area anyway. So really, we want to be taking longs until we do that. We've got H4 boss up, we've got the daily and the weekly down. We have to pay attention to the H4, even though the higher timeframes, like the leading timeframes, are actually heading down. We know that we've got a 70% chance that boss is going to be hit on the H4. So even though it may not look as though we're going to be breaking boss first, we have to pay attention to that. So ideally, we want to be taking longs. Now I took, I think it was like 7 longs last week and 1 short, and I didn't do too well. But we're gonna plow through real quick. I'm leaving my current trades on. I think there's a trade that I took from here, and I'm going to probably identify the trades that I got into as well. But we're just going to plow through. I don't have an enormous amount of time to create this video with, so I'm just going to go through like this. This is a trade to potentially get long. It's just a press down. We've got involved with this. You'd expect the price is going to go up. And the time of night as well, I think that was like a 1 AM candle, which is pretty decent. So there's not much volume during Asia, which means that, if you can get an entry in Asia, it normally just goes in one direction. There's not enough strength to break all the blocks. So with this, it was just press in the wrong direction. I would expect that price would come down during Asia, tap, go and break at least this little structure here, and then possibly continue up during the rest of London and New York. But that whole range, by the way, is 60 pips-ish, so be asking for a lot. anyway, that's a entry idea there. We've got the stutter to come back down. And no entry. Oh, there is an entry. I missed this one. But you'd be targeting initially there just to clear, you know, get yourself back to break even or something like that, and then continue to hold it. It would have worked. Great. Didn't even notice that. I'm going to mark up one which I know that I took because now I recognize it on the chart. I took this one because I thought that first one's been hit. You know, you'd at least be at break even with that because you try and take out the nearest swing. And then this one was formed as well. And I thought, well, if we are just zigzagging our way up to boss, which is up here, then I want to get involved with this one and the target. You know, the ideal target is, you know, up there, but you want to try and get to the nearest swing, which is this. So let's just click on through. Don't remember it taking so long to get there and taken out. Okay, so we got a loss there. So we got kind of like, you know, it depends where you would want to take a trade, but you've got at least a break even, potentially a win there. So 6.55. I personally wouldn't take my profit there. I try to just target there, but I have to bear in mind as well that if I am in a trade with that, I would probably do a manual close before it comes back out and takes me out. So I'd have taken out a trade. I'd have closed the position probably somewhere around here. And the reason for that is we've got other order blocks which are still valid behind us. So we're not in at the extreme. When you're in at the extreme, that means that you can hold it all the way to the end. But when you've got valid ones behind you, there's a reason and an incentive for the market to go backwards. All right. So just bear that in mind. You would have taken something out of this, whether or not it was 5R or 6R or 3R, you'd have taken something, and at the very least a break even. This one, just a loss. And then possibly, because we'd be looking at, you know, liquidity, sorry, liquidity forming there, possibly an idea to get short, depends what time of the day. So this is looking at London, so liquidity there. This might be the short that I took. Bit of a spoiler, I think this is also not a good trade. I'll place it on, oh, I'll do it now, just get it out of the way with. And then I think the target with that would have been initially here, and then down to here, which would have been to try and get long with that trade. All right, so we'll see how this plays out. I think we just kept on getting stopped out by little bits. Yeah, so also a stop out. Counter trend, very low probability of working out. So fair enough. I wouldn't have banked on that at all. Coming up there. Oh, there's one kind of left behind as well. Again, counter trend, not brilliant, but counter trend. Basically, there's imbalance left behind, kind of imbalance left behind, just a little bit here. So, you know, again, incentive for the market just to pop up a little bit, press down to where it needs to go, and then continue its journey. So we're just trying to bear in mind as the market's evolving during the day, like we're in this massive fat range, you know, based off of that news event which happened on Friday. Just going to double check what that was. Oh, non-farm payroll, fair enough. So, you know, sitting in this range, need to get a breakout of here. I think we're still stuck in it right now. I think that's where we've taken a counter trend short from. And then I believe this was a stop out by 0.1. You know, the thing is, like I was about to say, it's frustrating. It's frustrating because I want to do videos where I can show you like, oh yeah, we got a winner here and we got a winner there, but it's just not the reality of trading. Like you can follow your plan exact and it doesn't work. You know, it's like, we know that if we take everything that's valid and we go pro trend only, we can increase our win rate to about 0.32. So it's like, you know, about a third you'll win. Which means that you can have three identical setups and only win one of them. But you could do it, because of how statistics work, you could do it over 6 trades and lose 6 trades. But then every now and then you'll get 2 or 3 winners in a row. It's a probabilities game. You know, you just have to research how probabilities work and you become at peace with it. So that's where I'm at the moment. I don't really care if a trade wins or loses now, because it's pure probability. And if I just stick to my plan over time, you're laughing. So we're now in this trade. You can see where I'd placed it, where I'd identified it. So I'd identified this, I don't know, about 12 hours before. No, probably more than 12 hours. I'd spotted it ages ago. And then I think, did we get tapped out? Yeah. So I think that this came down. Let me just move these things out of the way. Yeah, so this literally just wicked us out. And it was like, oh, okay, great. But we had identified it. Look at how price shot away from there. So, you know, if it hadn't have taken us out, you know, it reached just on its initial push 9 hour, but you know, we got stopped out. So we had another trade there, so that's another loss. And then we'd identified potentially, like, bit, you know, it's not great, but we've got kind of the final press down before the push. The final press down was this, but just going from the inside bar, which is that, which was the final push up before the press down. That's the order block to go from. If we could get long from there, superb. But we continue to break higher. So the reason for that was we had all this liquidity. We'd swept the liquidity. We'd reacted from this area, which would have been, I don't know if some people took this short. Like, I think possibly I did. I think that I did actually, because again, this was kind of like an area which is like support and resistance, being bounced off so many times. It's the ideal kind of setup, really. It's like an inside bar setting. This would have been a valid short to take. It would have been counter trend, but it would have been valid. Obviously, it was only a short-term thing, and price continued up again. So I'm just going to mark it up on there as well. So another valid trade to take. And don't worry about these losers racking up, because the previous week was like plus 40 or something like that. You know, I think that I did the video for YouTube on that. But I'm quite, by the way, I'm quite vocal on, well, not always, but on Instagram, I'll show my winners and losers and stuff. So, you know, it's real Paul McGee. I think there's a link in the description if you want to follow me. But yeah, every now and then I just go on these little sprees where I post a lot about my trades. There's a possibility there, but not particularly interested. There's this one which I was interested in. We're now on, wow, we're on Thursday. Okay, we're actually plowing through this. There wasn't much price action then during the week. So there really wasn't. We haven't even looked at the H4. I'm just gonna flick over to the H4 and show you how that's formed. Okay, so there's a nice H4 had been formed here. It's all internal, so this is internal within the range. So price pushed up, we got H4 boss, came down there, broke the sort of mini structure, went into an internal structure. Price went up, swept, pressed down with a little bit of momentum, came down, pushed up again, came down, left an order block. So this black candle, that is the order. They're the blocked orders. They're the people going in the wrong direction. They're trapped. They're trapped orders essentially. They're the liquidity. They're waiting for price to come back and take them out of break even. All right, so that's the way that I see it anyway. We're waiting for price to come back down to here before pressing off like that. But there's also potential for shorts from here, which might be what we're doing right now. It is. So we'll see. But it kind of makes sense. So if this is the range and price often comes back to the halfway point, not all the time, but often it'll come back down to the halfway point. Again, this is right on the halfway line. It's on a daily order block. So it may have, you know, this might be the reaction out of the daily, but it's got the incentive to come back down to the tip of the daily, get hit on that H4 and then take off and go upwards into this area before starting to pay attention to the true daily and to the true weekly and head down. Okay. Don't think I've ever said the true daily and true weekly, but I just mean like the external structure, the main structure. You know, true isn't like a, you know, it isn't a used phrase, I guess. It doesn't mean anything apart from the main structure. Anyway, let's just keep on going. Yeah. So price is struggling within this H4 internal. All right, so price is struggling in there, it's starting to range. What I usually want to see is another break of an H4, go up, break out of there, close of a body, allow me to get into an order block just outside of or just within, and then continue, but we won't get in this. And I think that we had another red news event, which gave us a breakout that way and a breakout this way to give us like an internal range, which I'll draw on. Yeah, there. So this was like a sweep. This is why we're getting involved in this trade, so I should be able to talk you through this. We got a sweep of the liquidity above that H4 internal. We've now basically hit and mitigated this final kind of press before we started breaking all this internal structure. And then we had this huge drop off where we've got all this imbalance. So the incentive really for us is that if price was to zigzag and it's showing indications that price is struggling to go back up, we get involved, we take liquidity out of the order block because these are the blocked orders, the breakout traders trying to go long. They reset us and price goes down, and we're actually expecting, or not expecting, but there's potential for price to go long from here before going up to there. So you could do a continual trade. So get involved here, take profit technically there. So you take profit on this trade and then automatically your next trade kicks in. So you do a reverse with obviously a different figure because it would be 1%, the account would be slightly bigger, and then hold it up to here, which we've actually got nothing in here, although a possible reaction point from where the previous structure was, which sometimes we get a reaction from, I'm not sure why, probably because everyone else is looking at it, but I would expect possibly a small reaction off of this short term before pressing into here, which is where the orders are. Don't forget, like, just keep it simple. The market hunts liquidity. It's as simple as that. It's where the orders are. Like, the market has to go where the orders are, so it can either fuel and continue or it will fuel and reverse. Like, that's literally it. It's everything else that we look at, order blocks, imbalances, mitigations, structure, that's all made up stuff to add confluences to try and give us confidence on how the trades are going to play out. Where are we now? We're almost into this current week. So we did the trade markup video Sunday night. So last night right there, market opened. We'd laid out our charts properly. And we identified this as, yes, it is risky. It's a counter trend trade because it's counter trend to the H4. So it's counter trend to the HTF. But it has so many confluences to get short from, and we've got an incentive really for price to come down to here. So if we'd got into this long first, we wouldn't have got into this short. But because we've got to the short first, we've now got the incentive to try and take this long if price then comes there. And we'll possibly see in a second, I might have been stopped out of this trade while creating this video. But we know the probability, we know the odds, and we know that it was an odd worth taking. So let's just click on through. And one thing that I have identified from just doing this little brief backtest, all right, cool. Looks like price is stalling. Don't like it at the moment. We got it's an engulfing. One thing that I have noticed from doing this real brief backtest is there's a possible something on there. Call it 3R, -1, -2, -3, one which I didn't mark on, -3, -4, -5, and that's about it. So technically speaking, I overtraded last week. So I took 8 trades and there were 5 that we identified here. There might have been a couple more, to be fair, because when you're live trading, it is different from doing backtesting. Backtesting, you can get into the zone and you can identify everything if you want to. If you go really slowly, you can identify everything. But when you're live trading, it is so slow. It's very delayed gratification. You got loads of time to doubt your initial thought process. And the best thing to do is just get a notepad. Like, I still do it from time to time. Just get a notepad. It's a couple of quid at the shop, and just write down your confluences list, tick them off. So when you next look at that position, you open your notepad and go, it may not be looking good right now, but I remember why I got into that trade. So you know, it just takes out the self-doubt. Anyway, fingers crossed for this position. Hopefully it would have taken profit by the time that the video's out tomorrow morning. Questions, stick them in the comments. Catch you in a bit.